rate continues to improve, mostly in the lower price ranges. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, February 20th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can understand how the market is impacting your options as a home seller or buyer. Okay, let's look at how the market performed this past week. There's one more home on the market compared to last week, with the average asking price being roughly the same, $1,862,000, down from $1,901,000 last week. 4 homes went pending, fewer than the 10 we had last week, but more significant is that the average asking price on those pending sales dropped by almost $500,000 compared to the $2,042,000 we had last week. 4 homes sold, one more than last week, and the average closing price was roughly the same at $1,456,000, up $6,000 from last week. So, now that we know how the market performed this past week, we can look at the broader trends and indicators that help us understand where the market might be heading. Firstly, though, I'd like to apologize for my cold, but I want to make sure we get these updates for you, so I'm pushing through the awkward voice. If you do find this information helpful, why don't you hit the subscribe button down below so that way you don't miss out on future updates. And while you're down there, why not share it with a friend also? Everyone deserves to know what's going on in their local real estate market. Okay, let's look at the broader indicators. Excuse me. Inventory increased by 1 home this week, so not really much has changed from last week. 33 homes is a very reasonable inventory level for this time of year, and the fact that it has stopped its steep increase we saw from the beginning of the year is a good sign that our market will not be overloaded with inventory. And in line with that thought, our turnover rate is continuing to climb. It's up to just 80%, just under, or we were over 80, just under 80 now. But you see, it's been a steep incline since middle of January. We didn't have nearly as many new pending sales this week compared to last, but if we can average 5 or more per week as inventory stays over 30, we should be back to 100% turnover rate by next month. The over-under number just barely remained in the over range this week, just sneaking out over that $0 sign. That has more to do with the fact that the lower price range remains hot, while anything above 1.7 million. So while our over-under number stays strong, our average sales price has not seen the same momentum, Likewise, the average sales price, the average closing price for sales has fallen even more this week, down to 1.75. That's not likely to continue to fall, as half the current pending homes are asking 1.8 or more, and several well over 2 million. While home values have dropped a little in the past year, it's important to remember that this current average closing price is a 30-day rolling average and not indicative of how far all homes have dropped. Values are down about 2% over the past year, so this current 30-day average is more about the higher volume of lower priced homes closing compared to the higher priced homes. The QQQ fund is down about 1% this week, but the Silicon Valley economy is continuing to grow with the growth of the AI companies. So while we typically use the QQQ as our weather vane for how the Silicon Valley is moving, this current lull seems to have more to do with the national economy and less to do with the local tech economy, which is a good sign for our local real estate market. And another good sign for our real estate market is that interest rates are finally flirting for real with a number that starts with 5. Rates fell by 8 basis points to just 0.01 over that 6% mark. That's the average for a 30-year mortgage, and that hasn't started with anything less than 6 since late 2022, before our chart here. And this is the closest that rates have been to starting with a 5 or less since then. Higher interest rates continue to be one of the biggest things holding our market back from any significant movement. The market is still struggling to gain traction this year. Mid to late February is usually when we see the start of the strong spring market, and that has yet to take shape, much like last year. There were some positive movements this week, with the turnover rate creeping closer to 100% and inventory staying relatively flat. But the overall vibe of the market so far is trending to another softer year like last year. That being said, you can still find pockets of high activity. What this really means for sellers is that you will need to remain extremely intentional in the way that you prepare your home with improvements and pricing strategies. Working with a local expert will really improve your chances of value and speed when selling your home this year. Thanks for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed every time and how this market continues to shape up as we head into the spring. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.